Hello, and welcome to another webcast brought to you by Nerd Enterprises Incorporated. My name is Seth David, and I'll be your host for the next 10 minutes. I wanted to bring you a special webcast today, another life-changing webcast, going over what to do when you're in that situation, and we've all been there, when we've received a check from somebody, and it's been returned for non-sufficient funds, and also what to do when we're in that situation where we're on the other side of that coin and we've written a check which has then been returned for insufficient funds. The harder one, the more critical one, I think, is this first situation where a customer, let's say, has written us a check and then the check came out. Lots of bookkeepers get confused about this and about how to record the transactions in QuickBooks. So I want to go over that. QuickBooks gives you the tools you need. You just got to know how to use them. So I'm going to show you how to do that. My email is seth@nerdenterprises.com. Our QuickBooks blog can be found at quickbookshelp.wordpress.com, or simply go to www.quickbooksnerd.com. Directing you back to our main website at nerdenterprises.com, you can visit our learning center and go and browse the classes. We have pre-recorded classes you can download, all for only $10. And some of them are as long as 3 hours. There's lots of information packed in there for only $10. It's pretty amazing, actually. And also you'll find a section there where you can register for a private session, one-on-one. I can log in with you in a format just like what you're seeing here, and we can look at what's on your screen. I can work with you on your QuickBooks file, your Excel file, your PowerPoint, your Outlook, whatever you need to learn. We can teach it, and we can do it in this format, and we can record the whole thing. So without further ado, I will take you over to my sharing screen so that you can see what we have to show you as far as recording these checks. Checks. Let's go to the videotape. We'll go full screen. Share my desktop. First thing I'm going to show you is the QuickBooks file, apparently. I love how Windows interrupts you while you're trying to click on one thing. You've got something running in the background. The idea is multitasking, and I'm trying to click on something else, and all of a sudden another window pops up because I had it running in the background. Kind of defeats the purpose of multitasking. This is something they need to fix. Let's pull up the outline so I can show you what I'm talking about. We have the situation where somebody's written us a check and it was returned for non-sufficient funds. And the situation, that's the return deposit item. And then we have the situation where I've written a check and the check was returned. That's what we just call the return check. The mistakes bookkeepers make is that they delete the original deposit or the line item from that deposit for the check that was returned. And that's incorrect. Not the right way to do it. Not only that, it actually creates a mess when you go to reconcile later. And that's what I want to sort of demonstrate for you. It is a little tricky in terms of how to deal with this in QuickBooks, especially in the first example where the customer's written me a check. Because I've gotten a check from the customer, I've posted it to his invoice, and what's happened is now the check's been returned by the bank. Well, effectively what's happened is the customer has now not paid me. But I gave him credit for paying me, so I have to account for it that way. And the other thing to keep in mind is the bank gave me credit for the full amount of the deposit and then separately took the money out when the check was returned. So I don't want to alter that original deposit because my bank statement is going to show that whole deposit. And then they're going to show another electronic transaction where they pull the money out based on the check that was returned. So we're looking at a customer balance detail report just so I could pick something quickly. And let's say we're going to take this payment and say that it was returned unpaid. I check my history button here. There's no deposit. So I go to record a deposit. So let's say I've received these two payments from Adam's Candy Shop and Julie's Dollhouse. I click OK. We'll record this deposit on December 17, 2012. Save. So now I have that deposit in my bank account. Let's go into the checking. And there is my deposit of $110. Now the bank comes back and says, Adam's Candy Shop's check has been returned for non-sufficient funds. Again, I don't want to alter this deposit. That's what a lot of bookkeepers will do. They'll go in here and just delete this line and make it a deposit for $70. Problem is the bank's going to show me a deposit for $110 and it's not going to match up on reconciliation. I need to record a check because I need to mirror what the bank does. The bank took money out, so in QuickBooks I need to show money coming out of the account, not just eliminating the money going in. It doesn't work that way. So what I want to do is I post a check. The payee is the bank because the bank took the money back. The amount was the $40 they took back. And over here at the bottom where the account is, that's the tricky part. Second mistake bookkeepers make. They'll hit bank fees with this. This is not a bank fee. This is actually income that I received, or receivable I should say that was received, that is now being taken away, which gives you the clue as to what to do here. I've got to put that receivable back on the books. So I do it to accounts receivable, and over here under customer job, I have to record which customer's receivable this is. That will effectively put that customer's receivable back on the books. When I hit save and close, I can run my customer balance detail report again, which is reports, customers and receivables, customer balance detail. Click on that, and I will get my list. Now here's what happened, and here's why it's recorded appropriately. Let me break this up into columns so it's a little easier to follow. We get rid of the amount, go to debit and credit. So here are my invoices on the debit column. Here are my payments on the credit column. So we invoiced them twice. They owed us $80. They paid one of them for $40, but then that got returned for non-sufficient funds. So I take it back out. It puts their balance back to $80, right where it should be. Notice the transaction here is a check, and it's an EFT, an electronic funds transfer, because the money was automatically deducted from my account. So this is how we want to deal with the situation when a customer's check to us has been returned for non-sufficient fund. It's called a return deposited item. The next thing is we've written a check. Let's say I've written a check to some vendor for supplies. The way to fix that, when the bank returns that for non-sufficient funds, they're going to credit me back with the original amount of that check. So what I need to do is record a deposit to reflect that money came back into my account. They're going to say, you didn't have enough money. We originally deducted the check. Now we're putting it back. So the account I want to record it to here is going to be whatever account I recorded the original check to. So if I booked a check to supplies, the account here has to go to supplies, and I show the money coming back into the books in whatever the amount of the original check was. The next thing that's going to happen in both of these cases is the bank's probably going to charge me a fee. And the way to deal with that is very simple. I record a check to the bank, and now we're going to book it to bank service charges. And if you wish, you can create a sub-account for NSF fees. I like to keep it simple. I think one account for bank service charges kind of tells me what I need to know. I think a lot of companies have too much detail in their chart of accounts that they never use. Every company I've practically worked with has sub-accounts under bank service charges for NSF fees and check printing fees and all that. I can put things in the memo to tell me what it's for. The reality is I've never seen the situation where somebody actually dug that deep into the bank charges to see how it broke down. I take that back. I've done it when I start seeing that it's excessive, because then I've brought it to clients' attention that, hey, you're being sloppy about writing checks and you're getting hit with a lot of bank charges. But I can still see that without having to have all that detail. So that's my quick pitch on that. Keep it simple. Keep the chart of accounts simple. Just enough detail to tell us what we need to know, not too much detail to drown us and leave us wondering what we need to look at and what we don't need to look at. My email address is seth@nerdenterprises.com. Send me an email, ask me your questions. There's more of this great stuff in our QuickBooks blog. You can visit us on YouTube for some videos, youtube.com/nerdenterprises. Call us if you want a free consultation, 866-945-8070. You can actually get a hold of me, and I will speak with you and spend an hour if I need to on the phone with you, going over what your needs are and how we can fulfill them. We are the cure for your bookkeeping, accounting, and financial management headaches. Have a great week.